PowerPoint, I forget. One message that went out last week, sorry, that went out last week after we saw each other. I just want to remind you guys that you do have an extra credit available. It's already in Wiley Plus. 3 questions, one from chapter 13, one from 15, and one from 17. 10 points, unlimited attempts. You can ask me questions. You can, send me screenshots of things if you're having a struggle or whatever. It's to help you to work towards, also prepping for the final exam and for this next test that's coming up, because like I said, 2 of the questions are 15 and 17, but obviously focus on getting the homework done first. You have until December the 14th to do this. I wouldn't wait until that date. That's the same day that the final exam is also due, and the final exam review. So you have more than a month to get this done. I know that it's a busy time. I'm sure you've got multiple papers and tests and things to get done. You've probably got work, etc., etc. But I just don't want anybody to say that they didn't know, okay? That's not a valid excuse, or that they need extra time. I'm giving you what amounts to 5 weeks to do this. So even if you had to do half of a question, in 1 week, you would still basically be able to finish. You can save your work. It's not timed. Like I said, it's unlimited attempts. You can do whatever you want. And I'm expecting as many people as possible to get these 10 points. Remember what the 10 points does is, I said here, for example, if you got a 70, the grade becomes 80, right? So it's adding 10 points onto a test or exam grade. Does anybody have questions about this extra credit? That's on Wiley Plus, okay? So, that should be obvious. All right.
Professor.
Yeah, go ahead.
So I was trying to do the extra credit today in the morning. A little earlier before this lecture. So I did the A part for question 1. I am done with it, but the B part wouldn't open. I know it has 3 parts.
So I'll check. One other person had a problem like this before in the class, although it was limited to 1 person. Did you clicked on where it says that has the letter B and nothing's happening?
Yeah, usually it's like a blue link.
Yeah,
but it's black and it doesn't work.
Oh, you know what it might be that I'll have to see if I can go in and change the settings. It's possible that the setting on the question is requiring. I know that there's a setting where it's almost like you have to check for the first part, the previous part, and make sure that it's completely correct before you can go to the next part. Is your part A, did you submit your part A, or you just saved it and wanted to move on to part B?
I completed and I submitted it.
And it was correct?
Yeah, everything was correct.
Okay, so then I'll ask the Wiley rep what's going on, because that's weird. Because the way the settings work, it's either that you're allowed to do all the parts without, all of them having to be correct, or the other setting is that, 1 part has to be done and submitted before you can start the next part. But it sounds like you finished the part A and it's correct, and you still can't access part B. Am I understanding you?
Right.
All right. So thank you for pointing that out. Let me speak to the Wiley rep and ask her to go in. What she can do is actually access the system in the student view that you would see, and tell me why this is happening. All right. Thanks for that heads up. Anything else about the extra credit, people?
Oh, I don't have a question about extra credit, but I forgot to ask you about a question from the homework. I don't know if you're gonna go over it.
Well, the homework's due today, so you're talking about chapter 15 or chapter 17?
15.
Yeah, so I'm not going to go over homework question. I'm not going to go over the whole homework today because it's still due. But if you have a question about the homework, I can handle it either during the break or after class. Absolutely, no problem.
Okay.
All right.
Thank you.
Okay, no problem. Anything else? Oops. No. All right. Like I said, the homework is still due today at 6 o'clock. So I'll gladly take your questions, see, and if anybody else has a question about the homework, maybe during the break, we can just look at stuff quickly. If we can't handle all of it, then I'll try to end a few minutes early. And those who are also still busy with the homework would also just stick around to see what I'm saying in case you have a similar issue. All right, 5% of your grade. So please don't sleep on the homework. You know, we don't want people crying in their hands at the end of the semester, realizing that they missed the homework and, you know, now they're 5% lower. Even, you know, if you still haven't started today and you don't have much time, at least do something. Try to do something, whatever that thing may be. Okay, the homework has been available for ages. We've been done, like since the beginning of the semester, basically, we've been done with chapter 15 for, you know, at least a week now. So please try and do what you can if you haven't started it. All right. And then just to make sure that we are all okay, the homework for chapter 17 is still going to be a while. What else is happening here? Yeah, I mean, the next test and quiz and stuff is starting like the Tuesday before Thanksgiving and ending the following Tuesday. So there's, you know, there's still time on that. I would just focus, if you haven't done the chapter 15 homework, just focus on getting that done for now. Remember that we're less than 4 weeks out from the end of the semester. On December the 7th, which is less than 4 weeks away, is the last day that I see you. If you know, are kind of flailing or drowning or whatever, there's not much time to get things together. So if you're having a lot of problems with your classes and so on, now's the time to be sitting down with your calendar and trying to figure out how you are going to organize yourself to be able to be as successful as possible. I'm not just talking about my class, I'm just saying in general. All right. Okay. And I didn't mark this up, and I know it's still a ways away, but I just want to mention two things. One, although the 11th on Thursday is Veterans Day, and for those of us who have children, they're not in school that day. It's not a holiday for CUNY for whatever reason. We don't get that holiday, so we will have class on Thursday. So plan to be here, and if you can't be here because you have to watch your kids or whatever, then obviously I'll record the class, but I just want to be clear that there is class on Thursday. And then on Tuesday, the 23rd, I didn't mark this because we meet on Tuesdays and Thursdays, but just so you know, on the 23rd, it's a Thursday schedule. So, you know, whichever classes you have on a Thursday, those are the classes that will be meeting on the 23rd. If you ever have any doubts about what's going on with the calendar, remember you can access the academic calendar on the Guardia's website. So I'm talking about this day, Tuesday, the 23rd is an irregular day. They're making up the Thanksgiving Thursday. So it's a Thursday schedule. So if you work on a Thursday, like this is where the problem usually comes in. People actually work on a Thursday. I mean, sorry, I'm saying this wrong. Let's backtrack. It's Tuesday, but it's a Thursday schedule. So for the school. So if you maybe have me on a Tuesday and then you go to work because that's how your Tuesdays usually work, suddenly it's now a Thursday schedule. So if you would normally have classes in the afternoon or something on a Thursday, you have to be figuring out about your shifts or whatever at work, so there isn't a problem with you attending your classes. All right, and this is the bane of everybody's existence. You know, with CUNY, they make it one day into a different day. So it throws everybody off, like it's a pretend Thursday, but it's actually Tuesday. So heads up, you know, in case you have to organize something with your boss or your kids or whatever, that or your family, that it's actually a Thursday on the 23rd, and then obviously the 24th regular Wednesday, but then the 25th into, you know, the Thursday and Friday, that's Thanksgiving. So you basically have you know, this Thursday schedule on Tuesday, then you've got a Wednesday, and then you're off for 2 days. I hope that made sense. I feel like, okay, I feel like even I got lost
You
in what I
repeat.
was saying.
I'm
Yeah,
not
sure, sure, because I'm not confusing myself. So I don't even know if you guys are following. All right, let's start at the beginning. November the 23rd is a Tuesday, an actual Tuesday, all right? But the schedule for the school is pretending that it's a Thursday because they're trying to make up the lost Thursday that would be Thanksgiving. All right. So you will see me because we meet on Tuesdays and Thursdays at the same time. You'll see me that day as if it's Thursday. But I'm saying if you have any classes that would normally meet on a Tuesday and they don't meet on a Thursday, you know, the same times, it's not like maybe it's a class that only meets once a week and it meets on a Tuesday. It's not going to meet that Tuesday. Instead, your Thursday classes will meet on Tuesday. So if you know that you usually, you know, do something else on a Thursday afternoon or whatever, because you maybe don't even have classes and you usually go to work or whatever. This Tuesday is you know, you have to think carefully about it because this Tuesday is going to be like a Thursday. So whatever happens on a Thursday is happening on this Tuesday. And so if you have a clash with work or with family care or something, you got to be thinking about that now in case you have to rearrange your schedule to accommodate that. That's what I'm saying. So hopefully that was a little more clear than my previous attempt. Any
Yeah, now
questions?
it's clear. Yeah, thank you.
And then, of course, Veterans Day, the 11th of November, this coming Thursday, we do have class and all classes are running. The campus is open and so on. So please don't mistake. Normally we get every holiday that the DOE gives, but for some reason, Veterans Day, we don't get. So don't be confused thinking, oh, my niece is at home or my children are at home from school. So I'm also off school. You're not, okay? You have to meet with your classes on Thursday. Other than that, please make sure that you are registered. I will forever be a stuck record on this. Make sure that you're registering for classes. If you have not registered for a class for fall 2 and you think that you want to take a class in that 6-week session, please do so. If you find that a class that you want to take in the business area is full or something, talk to me. Maybe we can get you in anyway. Take advantage of the 6-week period, to try and get some of your credits under your belt. And then of course, for spring, you can register for those classes, but remember that if you have not uploaded proof of vaccination, that has to be done by February 23rd at the latest, which means you have to already have been fully vaccinated by February the 23rd. All right, so that's I don't know if there's any other admin, but let's leave it at that for now. Okay, you can see all these other things here, reading days and whatnot, figure out for your other classes also when is the exam and all of that. The last day to withdraw from any class is December the 8th. So if you feel like you're on a bad trajectory for a class, please don't just disappear from the class, because you could end up with a WU, which means unofficial withdrawal, which is the same as getting an F. If you think that you cannot complete a class successfully for whatever reason, you need to officially withdraw from the class by December the 8th to get a W grade, which can then be subsequently replaced by whatever grade you get if you take the class again. But if you see, oh my word, maybe after Thanksgiving or whatever, you have some test and you realize, even for this class, you realize like, oh no, my grade is really bad and I don't want to continue with this class. The worst thing you can do is disappear, all right? Because the faculty, if you've done work in the class and you've attended the class, but you don't do the final exam, faculty have to give you a WU grade. And again, that is the same as an F, and it will land on your GPA the same way an F will land on your GPA. Okay, so don't just walk away. Morning, I'm glad your internet is restored.
Sorry to interrupt. Yeah, it's kind of going in and out because I called for a problem that they had recently, but it wasn't internal or external, so they're working on a box outside. So they just knocked on the door and let us know that internet is going to be off and on throughout the day.
Okay, well, this class is being recorded. So, if you go in and out, I see you're here and you're trying to be here, so I'll mark you present. But if for some reason you're dropping off, just catch the parts of the class that you're missing based on, where we are when you drop off and come back on, okay? Have you already dropped off? All right. Okay, so let's move on and back into chapter 17. Okay.
Yes, sir. Can I ask you a question?
Mm.
So if you want to drop a class the day before it ends and you get a W, When you transfer for a senior college, do they see, like, let's say you retake the class and you get an A after, will they see the old W?
It depends. Sorry to give that. I know everybody hates that answer, but it depends on the school's policy. Because everybody doesn't just transfer within CUNY, so I can't just say, you know, this is what's going to happen. And then it also, you know, depends on the school itself. So certain things don't. So like, let's say you get an F in a class and you retake the class, and a W is like an F, okay? You get an F in a class, you retake the class, you can, by LaGuardia's policies, okay, you can replace that F. Let's say things went haywire, you got an F and you suddenly get an A, you can replace that F with an A in your transcript at LaGuardia, and your GPA will not reflect the F, excuse me, that has been replaced. However, when you transfer, the transfer school will get a complete transcript of every grade that you've gotten. And often their policy is that the F grades do calculate into your transfer GPA.
Okay.
So it will be recognized. If you get a C or above in a class, you know, within CUNY, the policy is that that class will transfer, especially the Gen Ed courses that are supposed to transfer. If you decide, you know, let's say you get a C minus in a class and you want to retake it because you're trying to improve, or let's say, I think you can start retaking from a D or something. I have to double check the catalog. But let's say you get a D in a class and you decide to retake it and you get an A, you will not replace the D with an A. Your grade in the class becomes the average of the two grades. All right. So that's why we have to be very careful about what I would call like strategic withdrawals from classes and stuff, because sometimes, okay, if you just want to graduate and you kind of, I mean, I don't want to say you don't care, but sometimes people just want to be done, and I completely understand and respect that. But someone who gets like a D minus in a class, which is basically you got somewhere between 60 and 63, not only is that grade not going to transfer when you go to the 4-year school, but you know, if you are not yet done with your, you know, your degree, you may have been better off, if you knew that you were on the brink of failing the class, you may have been better off withdrawing from the class with a W grade and retaking it. But then of course there's the time commitment of retaking the class and all of that. So there's a lot that goes into making these decisions. That's why I said, you know, anybody who's having difficulty, even if it's with this class, don't just disappear or don't just withdraw because you're freaking out and you think that, you know, if you don't get an A, then, you know, you don't want to be in the class anymore. Speak to me and let's think strategically about what makes sense. But, you know, to answer your first question, more likely than not, the transfer school will look at a full transcript in terms of what carries over when you transfer.
Okay. Yeah,
Okay.
thank you.
All right. So we are back with the statement of cash flows, and you know, as said before, the statement of cash flows is one of the financial statements. You probably recall that we have the balance sheet, the income statement, sometimes called the statement of operations, and then we also have this statement of cash flows, or sometimes called cash flow statement. It's all the same thing. I mean, sometimes there's other like stockholders equity statement and so on, but we don't have to go into that right now. In the statement of cash flows, we spoke about this last week, Thursday, but obviously it feels like, you know, a million years ago. So I'll just, or maybe it's just to me, but I'll just go over it again, right? The cash flows in the statement are classified into 3 parts. There's operating activities, which has got to do with your day-to-day activities. There's investing activities where you are buying and selling all kinds of, you know, property, plant and equipment, investments, and so on. And then there's financing activities where you are issuing and repaying debt, like what we did in chapter 15, or the stuff we did in chapter 13, which is issuing stocks, right? Now, I'm just here in the textbook for a second. I'll go back to my notes, but I just want to remind us about the things that we went over for what goes into, okay, goodness, there's a lot going on, eh? Sorry about Denise's mom. All right. So types of cash flow inflows and outflows that that we look at in the different activities. So operating activities is all about your day-to-day business. So you've got the money that's coming in from selling goods and services. I also explained to you that any interest received and dividends received go into operating activities. And then you've got all these outflows, like what you pay for inventory, what you pay for wages, taxes, expenses, interest, and so on. All right, that all goes into operating. And then investing activities, right? You have money coming in when you sell something. So this might seem weird, but just think about it, right? A sale of an asset is going to cause cash to flow in. A purchase of an asset is going to cause cash to flow out. All right. So we have to remember that although you get the asset, like you might get the equipment when you buy it, but cash is actually going out, and it's the cash that we are concerned with, right? The inflow and outflow of cash. So there's cash coming in from selling property, plant, and equipment, from selling, any investments that you might have in stocks or bonds, from collecting on loans that you made to people. And then the outflows are, the opposite, basically, from buying the property, from buying the investments, and from making the loans. Again, focus is on cash, not on what's happening, with other assets necessarily, or what's happening with other assets, but as it pertains to the flow of cash. And then the final piece here is financing activities. And as I said before, you're talking about cash inflows will come from when you are selling stock, right? Common and preferred stock, you'll get cash and you give up the stock. When you are borrowing, like what we did in chapter 15 with the bonds payable and the mortgage payable, when you borrow money from the bank, you get cash, even though you have more liabilities. The point is there's cash coming in. And then the outflows in financing activities relate to dividends, right? Paying the dividends to stockholders and also paying off the debt. And then finally, buying back treasury stock. You will remember treasury stock, hopefully, from chapter 13. And then there is this last piece, which I mentioned on last week, Thursday, that there's also a possibility that there are activities that are non-cash, right? That means that even though balances changed, for instance, in the balance sheet, there wasn't actually cash that flowed. So a typical example will be what we looked at, back in the day in chapter 13, when you issue stock for non-cash assets. So you buy a piece of land, and instead of paying for it in cash, you pay for it in stock. So the stock balance, the common stock balance is increasing, the land balance is increasing, but there is no cash involved in that transaction. So that transaction doesn't belong in the statement of cash flows, because the statement of cash flows is just about the movement of cash. And then similarly, converting bonds into common stock, or if you borrow to buy an asset, like maybe you buy a piece of equipment and you use accounts payable or notes payable, there's no cash that exchanged, that changed hands there. And finally, if you do any type of exchanges, you take a piece of or a piece of equipment or a machine, and you exchange it for some other asset without any cash being paid. That's also a non-cash activity. So again, these things will change your balance sheet, and we'll see in a moment when we start working on the cash flow that we have to use the balance sheet quite a bit to be able to build the statement of cash flows. They'll change the balance sheet, but they don't actually involve cash. So, be careful about, not assuming that every transaction involves cash. Any questions on these different activities that we just discussed? All right. So I'll go back in here. Basically, just covered everything that that was in the book there. So we don't really have to go over these notes again. Let's try and look at example 1 on the handout. And if you don't know where the handout is by now, hopefully everyone knows. But you're going to chapter 17 over here. This is the handout, and this is the link to the spreadsheet. So all the examples are at the end of this chapter here. So I'm going to look at example 1. Example 1 is basically asking us to analyze the transactions. And let me just do this so that I can see when people are raising their hands and stuff. Analyzing the transactions and trying to see where they fit into the statement of cash flows. All right, so we'll go, item by item and see what's happening. Analyze the transactions and indicate whether each transaction resulted in a cash flow from operating activities, investing activities, financing activities, or if it's a non-cash investing and financing activity. All right, so the 3 things that we just covered, plus the non-cash activities, we're trying to see where this fits in. So Tavares Corporation had these transactions during 2014, issued 50,000 par value common stock for cash. So now I want you to sit and think whether this is a cash transaction. The answer is obviously yes, right? Because they issued common stock for cash. Now the question is that a cash inflow or a cash outflow? Right, think about it. Is cash coming in or going out? And while you think about it, I'll remind you what the journal entry is. It's going to be debit cash, 50,000, and credit common stock, right? 50,000. So cash is going up by 50,000. Yeah, someone's talking to me, right in. Exactly. So this item, and yeah, guys, it's actually a good idea, Scarlett. You can type to me in the chat. So issued 50,000 par value common stock for cash. That is a cash inflow. And which activities do you think it should go into? Does someone want to tell me on the chat? Which activities? Operating, right? Let's go back here. Operating, investing, or financing? Where should this go? Where did we see things to do with stocks? We saw stuff to do with securities, which is stocks over here, but this is when you are investing in somebody else's stocks. So when we go further down, we see, oh yeah, cash inflow from sale of common stock. So this is a financing activity. So this is a cash inflow and it belongs in financing activities. Questions, anybody? All right. So in B, it says that we purchased the machine for $30,000, right? So we bought a machine. Now the question is, did we pay for it in cash? And it says, no, we gave a long-term note in exchange. So is there cash in this transaction? Someone want to tell me in the chat, is there any cash involved in this transaction?
No.
No, right? No cash. So because if you had to do the journal entry, you would see that it's debit machine, or however maybe they call the machine equipment, I don't know, debit machine and credit a note payable. So cash doesn't feature at all. So this is going to be a non-cash investing, right? Because a purchase of a machine is an investing activity, but it's non-cash. Thank you. No. So everyone agrees that there's no cash here. So this will fall into, if I just show you on the textbook again, this purchasing of the machine falls into significant non-cash activities, and those activities are usually either investing or financing activities. And so that's why I'm calling it investing. How do I know it's investing? Because if I go back up here, I can see that under investing is the purchase of property, plant, and equipment, right? So it is an investing activity because it changed the balance on the machine, but it is non-cash. Thank you. So in C, we say we issued 200,000 par value common stock upon conversion of bonds having a face value of 200,000. So what we're saying here is we had bonds that where we owed people 200,000. Instead of paying them cash, to pay back the bond, we gave them stocks. So what do you guys think? Is there cash involved in this transaction or no? Here go my chat people. No. Anybody else? Yes or no? No cash, right? So I'll do the journal entry for you so you can see why there's no cash. That you would debit bonds payable, because you are getting rid of the liability, right? So you're saying 200,000 for bonds payable, and then you are crediting common stock because you are issuing stock to pay off the bond. So that's what the journal entry looks like. So this is going to be non-cash also, right? It's non-cash, but if we look at what's involved here, it's these things over here, right? Stock and debt. Bonds payable is part of debt. So it's going to be a non-cash financing activity. Questions up to C. Anybody have questions, or I need to clarify something for you?
Professor,
I'm listening.
can you kind of clarify? I know you just said it, but like kind of
Fine.
Clarify the difference between the non-cash investing and non-cash financing, because I know they're both like sort of like the conversion.
Yeah, so the first point is that they're both non-cash, right? It's a non-cash activity. Then you've just got this little bit of a I guess differentiation between the two. So the way you differentiate is you're asking, what is the company doing, right? They're buying a machine here. So now you have to know your classifications. Investing activities, right? Oh, I keep doing that. Includes the purchase of property, plant, and equipment. And machines are part of that group of assets. So that means that that's a non-cash activity, but it's a non-cash investing activity. And the reason we do the differentiation is because people will see that the balance sheet balances changed, like, you know, for different types of assets. And when we disclose that they are non-cash activities, we need to be really particular so that the user of the financials can immediately see, oh, this has got to do with, you know, property, plant, and equipment or whatever. So for the other one, for the financing, I'm asking again, what is the company doing? They're issuing stock. So already when you see issuing stock, you should be thinking financing activities, right? Because it's written over here, sale of common and preferred stock. And they're issuing it to pay off a bond. And so the bonds also fall into, right, debt, bonds, and notes. So that's why we don't just say non-cash, but we say non-cash finance.
Okay, yeah.
Okay.
Thank you. It sounds better when it's kind of broken down in my head. It registers. So
yeah, that's fine.
Yeah,
I mean, it's
thank you.
The rule is that if one person's asking a question, it's probably about 3 other people that have the same questions. I never mind explaining it. All right. It's unlikely to ever have a non-cash operating activities, just so you know, because we deal with any non-cash operating stuff within the operating activities section. So don't worry about that. It's just going to be either investing or financing. All right.
Okay, sounds good.
Okay. Declared and paid a cash dividend of 18,000. So is cash involved? That's kind of obvious, right? Yes. Cash is involved for sure. And cash is going out. Yes. And then when we look back at our trusty little reference, we see that the payment of cash to stockholders as dividends is part of financing activities. All right, it's linked to the stock, right? That's also part of financing activities. So how does this journal entry go? You would have said debit dividends payable, right? Because there would have been a declaration at some point. So the payment is debit dividends payable and the credit is to cash. So obviously cash is going out. So this is going to be, where's my cursor? Okay. This is going to be a cash outflow in financing activities. Okay.
Sorry, Professor. The cash was debited. It's supposed to be.
Oh, sorry. Yeah, typo. Thank you. Thanks for being awake here. Yeah, so credit cash, cash out, good. So it's a cash outflow in financing activities. And then that again, you can remember that dividends paid goes into, and this is a little bit confusing, but you know, this is unfortunately how they decided to do it. Dividends paid goes into financing activities, but dividends received goes into operating activities, all right? Sold a long-term investment with a cost of $15,000 for $15,000 cash. So here's your standard question, right? Is cash involved? The answer is the words right there, right?
Yes.
The answer is yes, cash is involved. Now the question is, what is the company doing? They're selling an investment. So if we go back to our little cheat sheet here, a sale of investment is part of, and the name implies it, right? Investing activities. So that's where we'll put it. So if we had to do the journal entry for this, right? Here is now the debit to cash, the actual correct debit, right? Debit cash 15,000, and you credit the investment because the asset investment is going down by 15,000. There seems to be no gain or loss. And if you the questions in ask for these journal entries, I'm making them so that the people who maybe are still a little bit stuck as to why we are saying cash in or out or whatever can actually see the journal entry and make the connection, right? This would be, sorry, this would be cash going in. What am I doing wrong here? No,
Professor, you missed credit on investment.
it's like, okay, you know, I gotta make my brain go slower than so that my hands can catch up. Sorry. Thank you. All right. So we sold this. So where's the? I'm now like completely lost on my own typing. Okay, that's not how the arrow is supposed to look, but I don't want to spend any more time with that. So this is going to be a cash. Now this is what's weird, right? Now it's going to be a cash inflow because it's money coming in. Even though you sold an investment, you have to be asking what's happening to cash, not what's happening to investments, what's happening to cash. So it's a cash inflow because we got money for the sale of the investment, and it's going to obviously be from investing activities. All right, so thanks for the awake people here who are checking my debits and credits. Questions so far, A through E, anything that needs to be clarified further, or any other auditing that you want to do of my journals in case I forgot something? Yeah, we have to be able to laugh at ourselves a little bit, right? Okay, so collected 16,000 of accounts receivable. Is there cash involved when we collect accounts receivable? Here goes the chat. And I'm gonna say that that answer is not correct. Is there cash involved when you collect accounts receivable? Someone owes you money and you're collecting it. What do you think? You want to change that answer? Yes. All right. There's going to be cash involved. In fact, this is like old journal entries from back in the day that you, no, don't apologize, that you may or may not remember. For collection of accounts receivable, it's going to go debit cash. Let's see if I remember the credit now, right? Credit accounts receivable, right? That's how the journal entry looks. So there's definitely cash coming in, right? Because we're debiting cash. So now let's go back to the cheat sheet here and say, where does accounts receivable fall into the mix? It's part of your operating activities, all right? You're collecting money from people for the sale of goods or services. So it's a cash inflow in operating activities. Okay, cash inflow, operating activity. And then the last one, paid. So there's the giveaway already. Cash is definitely involved. We paid $18,000 on accounts payable. Where does accounts payable fall in? It's part of your operating activities. We don't know if we paid for inventory, if we paid for, some type of expense or what we're paying for, but we're paying for accounts payable. That's accounts payable by definition is going to be part of the operating activities. So here the journal entry would have been debit accounts payable to decrease the liability, and you would be crediting cash with the same 18,000. The credit to cash tells you that cash is flowing out, right? That's how you can use your knowledge of the journal entries to be able to answer the question. So it's going to be cash outflow and operating activities. Okay. So we've done A through G. Anybody have anything that they want to ask about or add, or confusions that still exist about the different activities? So now the question becomes, so what? Who cares, right? That's what I mean, I don't know that you want to say it to your professor, but that's the question you should be asking, right? So what? Who cares? What are we doing? Our end goal is to build a statement of cash flows. In order to do that, we need to understand which types of transactions go into every different part of the cash flows, right? Cash, or the statement of cash flows, excuse me. It's broken up into 3 areas: operating activities, investing, and financing. You have to be able to know where to place those items. Otherwise, you're just not going to be able to build the statement. So, part of this exercise, which I kind of said at the beginning, but maybe it makes more sense now that we've actually gone through it. Part of this exercise is for you to become accustomed to looking at different transactions and knowing where they fit in the statement of cash flows. And so, this is kind of like a primer to help you do that. I don't expect that anybody's going to be memorizing this sheet. That's not really the point of it. As we go through practicing different cash flows, we'll be able to, get to the point of knowing where to put this stuff. But certainly this helps to, as a reference point, especially if you're doing examples or you're doing your homework. So if you get stuck on something, not knowing where it should go, that, that cheat sheet, for lack of a better term, is very helpful in that case. All right. So what's next? I will once again just flash an example, and let me see if it's here or on the next section. An example, yeah. Here's kind of what the statement of cash flows looks like. I know it's all X's, and that's because it's, they're just trying to give a model for how it works. So, it's a financial statement. So you got the company name, the name of the statement. It's obviously for a period of time because you're looking at how cash went in and out over, let's say, over a year. And the first thing that we do is the cash flow from operating activities. We lead with, how much money has been generated just from doing the business. Then it's investing, then financing. Then we calculate for those 3 different sections, how much cash, how much is the increase or decrease in cash, and how much cash did we have at the start. And then we add those 2 together, and that tells us how much cash we had at the end of the year. So if you had to look at your bank accounts, right, if you see, you look at the beginning of the month and your bank account says that there's $500, and you look at the end of the month and you see that your bank account says that there's, $900. Now, that overall there was an increase of $400, but that you got paid your salary, and you also, paid some of your expenses, and you also sent money to someone via Zelle or whatever the case may be. So there were different inflows and outflows from your account. So even though you can say, yes, my account balance increased from $500 at the beginning of the month to $900 at the end of the month, it wasn't just because of one transaction of $400. It was probably many different transactions that netted out to an increase of $400, right? So that's the same thing that we're talking about here. We say, okay, the company started with with $500 at the beginning of the year. They ended with $900. So it's a $400 change, but we know that these are big companies with lots of activities going on. So we want to explain that difference of $400 by classifying all the inflows and outflows into these three sections, right? And so at the end of every cash flow, your ending balance, right, where it says cash at the end of the period, your ending balance should be the same amount as the cash balance on the balance sheet. Just like if you were looking at your bank statements, right, you can say, okay, $900. So excuse me, I know what the ending number is. I know what the beginning number is. It's just up to me to check in between to make sure that all the transactions that occurred, that those are things that are expected to happen and that they make sense. We're doing the same thing for a company because the other financial statements that we have, the income statement and the balance sheet, don't do that. If you look at a balance sheet, and let me see if there's one conveniently here. Yes, there is. If you look at a balance sheet, the balance sheet is telling you that there's a 22,000 increase in cash from 2021 to 2022, but it doesn't tell you, what caused that increase. And you know that for a company, there's no way that there was just one check deposited for 22,000 and that's the end of the story. There would have been many inflows and many outflows that got you to the point of there being a net inflow or net increase in cash of 22,000. We use the statement of cash flows to explain this change, right? That's what we're trying to do, to explain this change so that we can see, is the company actually generating, cash, or are they, and I just want to see if, well, this is where they start, with my not so favorite thing. Are they actually generating cash, or, is from their day-to-day operations, or is that increasing cash from something else? So, just to revisit, why do we look at it? We want to see whether the company can generate cash flows from its business. Will it be able to pay its debt and dividends? Why is there a difference between net income and the increase in cash from operating activities? And what type of other activities did this company get involved in? So I'll give you an example, right? This company may have this one that we were just looking at may have a $22,000 increase in cash, and you think, oh, they're doing great. But you may find out that the bulk of this increase is because they issued stock for cash, and actually, their operating activities aren't looking so good. Now, you can expect that the company is not going to issue stock every year. They won't be able to issue stock all the time to boost their cash. So that can already be a red flag for someone looking at a company to say, okay, this increase is predominantly because of financing activities, maybe because they borrowed money or they issued stock. So what is going on in the business that they are trying to borrow all this money? It's just like your life, right? You may, or let's take me. I don't want to, make anybody feel nervous or attacked or whatever. Let's say I am, living large, buying all the stuff, spending all my money, and I'm actually spending it on credit, on a credit card. And at the end of the month, I'm not able to pay off the entire balance on the credit card. That means that, yes, I had cash, I had money to buy stuff, but I was actually financing my purchases using a credit card, right? And now we come to the end of the month and we realize that I actually cannot afford to repay it, which means I didn't have that money to begin with. It's the cash flow statement or statement of cash flows can tell you the same thing about a company, how they're managing their cash. And why do we care? Because a company can be super profitable. They can have a massive net income number, but if they are not collecting the cash from their customers, they won't be able to pay their bills and they will be out of business before you know it, right? I can be selling stuff to people like crazy and telling them, oh, don't worry, pay me at the end of the month or pay me next month. I look like I'm making a lot of business, but I'm actually not collecting cash. So I just won't survive, unless I start taking out loans and stuff or paying for things on my credit card, but that, becomes even worse. So hopefully, through that little discussion, you can begin to see why the statement of cash flows is actually very important for, in general for the company to perform, like to calculate, for users to see, and obviously we need to know how to do it as well. So now, we'll break maybe in 5 minutes, but I just want to talk a little bit about how to prepare the statement of cash flows. So we use what is called the indirect method to prepare it, which means that the first item that you will see on the cash flow under operating activities is actually net income. So we start with net income, but if you remember anything about, and I mean this, it's hard to say if people remember this type of terminology, and it's okay if you don't. The income statement is based on the accrual method. Okay, an accrual method means that we recognize revenue and expense even if we didn't pay cash or receive cash. So net income is a starting point, but net income is not the same as cash. All right, so we'll start with that, and then we adjust the net income number for certain items to get from net income to the net cash that is generated by our operating activities. And so, I'm just going to go down here and see if I can show you, and don't worry, we will take time to do this, but I just want to show you what I'm talking about, right? So this is an excerpt of what these numbers are not necessarily going to, mean much to you, but I want to show you how we set up the cash flows from operating activities. There's the heading. Right, we start with net income. This number is given because it's already known from the income statement. So in a question, you either get given a whole income statement or you get given the net income number. Then you can see as a long thing that's written out. These are the adjustments that I was telling you about. There's adjustments to reconcile this net income to net cash provided by operating activities. So that's a long way of saying this is not a cash number, because this includes revenue some of it was received in cash, some of it is still accounts receivable, all right? This includes expenses, some were paid, some are still payable, right? So we want to get from this number that is accrual and not cash to see how much cash did the company actually generate from its operations. And the way we do that is we make 3 adjustments to the net income number, all right? 3 adjustments have to be made. And those adjustments are going to be 1 for non-cash expenses, it's specifically depreciation expense, 2 for your current assets. I'll go here to show you that I've already written it down. Okay. Okay, so you're going to look at non-current asset and liability accounts. All right. And this is still not the best way to show you over here. Let me do it here. So these are the adjustments. You're first going to do non-cash expenses like depreciation and amortization. Then you're going to look for any gains and losses from investing and financing activities. And I'll show you that we have to make an adjustment for that, and I'll tell you why. And the last piece that you have to do is any changes in non-cash current asset and current liability accounts. Okay, so those are the 3 adjustments that you make to net income to get to net cash provided by or used by operating activities. I'm going to stop it there so this can sink in. I've said a lot of things. People are probably like, okay, my brain just exploded, and that's fine. Don't worry. I will put your brain back together. Come back at 11:40. And we will look at an example to try and make things a little bit clearer as to how we do the operating activities section of the cash flow. All right, 11:40. And C, you wanted to ask me something about the homework.
Yes, I don't know if I should do it now or just next class when you go over it. I mean, I did answer the question. I got the full points, but I wasn't sure why. Like,
okay. So I mean, if you
but I want to, like, I did it last week, so I'm not sure if I remember much of what I did.
No, then let's just wait. Let's just wait.
I'll just wait for next week. I'll go over it before class, and then when I'm asking a question, I'll be more prepared. Yeah, because I realized it was in my notebook, and I was like, oh, I have a question.
That's fine.
Can you go back to the example we did together? Because I was trying to copy it and I didn't have enough time. That we
Oh.
just did with the class notes.
Oh, of course. Sorry, I didn't realize that people were struggling to keep up. This one?
Yes, perfect. Thank you.
Must I make it smaller? I don't know which part of the example you weren't able to copy. So,
I think the beginning.
okay.
Beginning. Yeah,
All right.
that's perfect. Thank you.
All right. I'll be right back, guys. let's get back into it. Let's try and make this a little bit bigger. Okay, there. Okay, so we're gonna do example 2, where I'll start showing you how to do. It's a very basic basic in the sense that it can get more complicated, but that's where we start. A basic operating activities exercise to see how to make those 3 adjustments that I was talking about. So for the most part, you often get a whole balance sheet 2 years. It's called a comparative balance sheet because you can compare 1 year to the other to see the changes in the balances. And what you end up having to do is, read the entire all the information that's given, because you need certain things to be able to even begin to do the cash flow. So the current sections of Scoggins Inc. balance sheet at December 31, 2013 and 14 are presented here. Scoggins net income for 2014 was 153,000. So that's important because, we said before that we need to start the operating activity section with net income. That's the beginning point. And then we make 3 adjustments to net income in order to get to the net cash generated or used by operating activities. Then they also tell you that depreciation expense was 24,000. So if we just scroll back up, let me see if I can get rid of my face here. If we just scroll back up to this part of the year. Remember, net income plus or minus some adjustments gives you the net cash provided by or used by operating activities. The adjustments over here, you're going to add back depreciation expense. You're going to deduct any gains or add any losses that resulted from investing or financing activities. We don't have this in our example, but we'll have it in other examples. And we do this because investing and financing activities are dealt with lower on in the statement of cash flows, but net income has some balances related to those activities in it already. So we have to make an adjustment for it. And then the last thing that we adjust for is increases and decreases in current assets and current liabilities. And we're saying current assets, current liabilities, things like accounts payable, accounts receivable, prepaid expenses, and so on. All right, so we need net income. Depreciation expense is the first adjustment. Now we have to see if we have current assets and current liabilities. So looking at these 2 numbers here, right? Cash changed for the year, right, from 99,000 to 105,000. So that's a $6,000 change. And if we were building the whole statement of cash flows, we would need to end on a balance of 105. But we are only doing the operating activity section, so we're not going to see the cash flow right through to the end. We're also, what I said, doing the indirect method, which means we start with net income. Questions up to there? Anybody? Let me check if there are any hands going up. All right. So let me go onto this sheet here and do, I didn't do exercise 1 on this page, but hopefully people took the stuff down. I should have done it on this page. Okay. So we're doing a financial statement. So I'm going to, go the whole hog and do the name of the company is Scoggins Inc. Right, that's for the sheet. Statement of cash flows. And it's for the year ended December 31, 2014. All right, so that's the, just the classic headings. These things are normally given in Wiley, but sometimes they ask you to, they have a drop down where you have to choose whether it's for the year ended or at a point in time. Cash flow is always for a period of time. And the way we start is cash flows from operating activities, right? And the first line is always going to be net income. in your indirect method, it's always net income. So we take the 153,000, right? If we go back to the question, I just remind you, 153,000 is what we have for net income. And now, and I think the homework system will give you this, you don't have to memorize this, but now we have this line that says adjustments to reconcile net income to net cash provided by operating activities. Something is wrong now. Okay. So that's just a heading to tell the reader that adjustments are coming, right? And so we don't normally number the adjustments, but I'm numbering them now so that you can see what I'm saying. So the first adjustment is to add back any non-cash expenses. So depreciation, when you do the journal entry for depreciation, you debit depreciation expense and you credit accumulated depreciation. That expense causes net income to go down, but the depreciation expense was not paid in cash. So because that's not an actual cash payment, we do not want net income to go down by that amount. So we put the depreciation back, okay? So the first adjustment is to add back depreciation of 24,000. I'm putting the adjustments in a line over here to create a subtotal that will then go over to be added to or subtracted from the 153,000. That's the format that we follow. So again, to repeat, because I know this stuff is, it's not easy maybe to follow. This 153,000 net income was already decreased for depreciation expense, right? However, what we know is depreciation expense is not a cash payment. So we don't want the impact of depreciation to be included in the number. So since it was subtracted to get to this net income number, we're going to add it back so that we can make the impact of depreciation 0. All right, because remember, we are trying to get from net income to the actual cash that was generated from operating activities. Questions, anybody? Or you need me to repeat anything?
So any cash inflow will do the opposite activity, like
Yeah, so it's
in, do
yes.
out, and then any cash outflow will do inflow.
Well, so it's this one is a little bit confusing because this is a non-cash expense. Okay, it's an expense that was not paid in cash that already was subtracted to get to net income. So this non-cash expense has to be added back so that you can eliminate. So basically what happened here was, who knows what all the numbers were, sorry, but we said subtract, right, 24,000, that minus 24,000, and at the end, we got to 153,000 in net income, right? In the income statement, there were other things going on in the income statement, but I'm saying if you just look at depreciation, in the income statement, there was a depreciation expense, part of operating expenses of 24,000. It made the net income lower by 24,000, but this is not paid in cash. It was never paid in cash. So we want to eliminate anything that wasn't paid in cash from having any impact, right, on this net income number. So the way you're going to do that is basically to add this number back in so that it's as if it didn't happen at all.
Okay, only in case it wasn't paid in cash. Like cash.
Yeah, and that's the rule. And so if we follow the rules, I know some of the stuff is very difficult to understand the logic. I get it, guys. I'm not immune to the fact that it's weird. I know why it's happening. I'll try and explain it to you. But if you really are struggling to follow this, remember you are told in the rules that you have to add this back. So even if initially you can't understand exactly why, I'll keep explaining why. But also just remember that you don't have to do the thing correctly only by virtue of understanding the explanation. You actually have instructions that you have to add back non-cash expenses like depreciation or amortization. All right. So if you follow the instructions, you'll still get the answer right. And you can keep trying to understand why it's that, why the reasoning is like this. This is the reasoning. We are trying to get from net income to net cash. Depreciation is non-cash, so we need to eliminate the impact of depreciation from our net income number. Okay, think about it. It will sink in eventually. The second adjustment that we have is to deduct any gains or add any losses that relate to investing and financing activities. Okay, that's the instruction. Because in your income statement, right, in an income statement, you you would normally record gains and losses. A gain, right, if we go back to this kind of sideline income statement here, in the income statement, right, in the income statement, you would add any gains and subtract any losses, okay? But these gains and losses relate to investing and financing activities, not operating activities. So if you think about a gain or, let's say a loss on a sale of equipment, it goes into the income statement, but it doesn't relate to operating activities. So that number is in net income. So I'll say example, right? A loss on sale of equipment of, let's say, $3,000, right, would be included in your net income. But it should be included in investing activities, not operating activities. So what we do is again the opposite, right? What we say is in the second adjustment, you say you add any losses back, you add losses or deduct any gains. That's what you're doing in the second. In this example, we don't have any gains or losses. You can see in the question again, there's nothing written about gains or losses, but I'm running you through the adjustment as, again, a primer. We're going to do many more of these to remind you that you have to look for any gains or losses that are mentioned in the question. And why the opposite, right? We don't normally add losses or subtract gains. That's because a loss would already have been, when I say included in net income, I should be saying that it is already deducted from, right? A loss is already deducted from net income. So this number over here includes the impact of any gains or losses. We don't want those gains or losses to be included here because they're going to be included in investing and financing activities. So we have to take them out. So just like with the depreciation thing, you're adding back depreciation because you want the impact of depreciation to be zero on net income. With the gains and the losses, you add back any losses because you want the impact to be zero, and you deduct any gains for the same reason, because these things were already in net income and you want to take them out. I know, right? I told you it wasn't going to be easy, and it takes probably about 3 or more go around to. I have all the patience in the world, all the time in the world. I'll keep explaining it to you, but I welcome any specific questions around this, because otherwise I'm just talking to myself. So if you do have a question, or if you want me to repeat something, I'm glad to do it. Otherwise, I'll move on and we'll just keep doing examples until it sinks in. The issue with the cash flow is that you actually have to understand how the income statement works, and you have to understand how the balance sheet works in order to build a cash flow. And what I often find is that people get stuck on the cash flow because of the other financial statements. So if you think about what an income statement includes, right? An income statement is going to include revenue. It's going to include expenses, right? It's going to include any gains and any losses. The revenue is a plus, expenses are a minus, the gains are plus, losses are a minus, right? And so because expenses are a minus, depreciation expense was already a minus from here. So we have to add, we have to plus it to eliminate the impact. Because a gain is a plus in the income statement, any gains that we want to get rid of, we have to minus. A loss is a minus in the income statement. To get rid of the impact of any loss on this number, we have to add it back so that the net impact of these things that we don't want in operating activities is zero. That's what we're doing. Okay, and it feels weird because you're kind of doing the opposite of something and I don't know, right? But just hang with me a little bit longer. I'll get you there.
Professor,
Okay.
Sorry, excuse me. Can you do another example of the same,
Of the loss or the gain, that thing?
of this one? Yes, of this cash flow.
Of this cash flow. I mean,
Yes.
I'm still building this cash flow, but what do you want to,
Okay.
what do you want me to see? What do you want me to do?
So pretty much can I, so the formula, because that's the best way that I know how
Yeah.
to, can I get a more, I don't know, just a formula so I can see
Yeah,
like this
that's here.
times, yeah,
That's yeah.
okay,
Net income, add or subtract any adjustments, gives you net cash. What are
Okay.
the, so you know the net income number, 153,000. What
yes,
are the adjustments? You add back non-cash expenses, specifically depreciation. That's what I just did, right?
okay, which was 24,
Uh-huh.
okay,
Next adjustment, subtract any gains or add any losses from investing and financing activities. These are rules. This is what you have to do.
okay,
Okay. Since you talk about formulas, right? So
yes,
in a question, they either give you the gain or the loss number, or you have to calculate it. And I'll show you guys both. In this question, we don't have that yet because it's an extra level of complication that I first just wanted to, do one thing at a time. But
yeah,
this is the rule. Add back the non-cash expenses like depreciation, deduct any gains, add any losses. The third step, which is what I'm coming to now, you have to analyze the changes in non-cash current assets and current liabilities, which I'll show you guys. And then
Okay.
there's rules about whether you add or subtract those changes. Okay, so this whole section over here, these are the rules.
okay,
All right.
yes.
Okay.
I work best with formula. That's how I get through
Yeah.
this.
Yeah, I mean, that's fine. This is why I'm saying if a formula is going to serve you better until you maybe understand what's actually why we're doing what we're doing, then that's fine. If you never, many of you are not accounting majors, so you're just trying to hold on for dear life till the end of the semester, right? So if the only way you're going to get through this thing is by memorizing a formula, that's fine. For my accounting majors, I don't know if it's only Jefferson or if there's other people, you probably want to try a little bit to understand why we're doing what we're doing, because the cash flow is not going to go away. But thank you, Jahomi, for bringing that up. Everybody else, formula is your friend. All right. So in the third step, where they're talking about analyzing non-cash current assets and current liabilities, here you also need to know what is a current asset and what is a current liability. Okay, so we're going back to accounting one work. Accounts receivable is a current asset. All right, because it's an asset that you expect to receive the future benefits within 1 year from the balance sheet date. Inventory, the same, it's a current asset. And so is prepaid expenses. You expect to, again, get all the future benefits within 1 year. And then over here, they actually tell you that these are all current liabilities. Accrued expenses payable is just expenses that you incurred that you have not yet paid at the end of the year. And they're all lumped into one account called accrued expenses payable, as opposed to having, salaries payable and whatever else payable separately. They put them into one account, and then accounts payable is also current liability. So just to look at the rule again before we do any calculations, it says that you analyze these non-cash current assets and current liabilities. You're looking for increases and decreases in the accounts from 1 year to the next. And based on what happens, you're either going to add or subtract the increases and the decreases. So what you end up doing is just calculate whether there is an increase or, right, you're going from 2013 to 2014. So I'm going to give you guys maybe 3 minutes. And you're going to calculate whether this is an increase or decrease and how much, right? For all the current assets and all the current liabilities, just to keep people engaged. Go ahead till 12:03, 12:04, just calculate increases and decreases, and people can start typing the amounts in the chat if you want to. Okay. So if you spaced out increases or decreases, current assets and current liabilities from 2013 to 14, okay? Okay, 1 more minute to calculate. All right, I'm seeing some action on the chat. So let me see, plus 6K. Yeah, that's the cash. So we're looking for non-cash. So accounts receivable. Do we agree that accounts receivable went up by 21,000? Sorry, where's my writing? Right? Up by 21,000. Inventory down by 14,000. Hopefully you're getting right. It's just the difference between 172 and 158. Inventory went down by 14,000. Prepaid expenses, just going back here, I mean, it's obvious, but just in case, it went up by 5,000, right? Those are your current assets. Those are the changes in the current assets. Just to make sure we still know what we're doing. This is the information that we need for the third adjustment to net income. All right. And we're not done yet. We still have to look at the current liabilities. Current liabilities, your accrued expenses payable, right? It went up by 10,000. So that's a plus 10,000. And finally, your accounts payable, and I'm just referring to the chat to just honor that someone put an answer in there. It went down by 7,000. Oops, sorry, not KK, 7,000. Anybody have questions about how we arrived at these numbers? All right. So now the question is, what do we do with this, right? We know that there were increases and decreases. What are we going to do about it? So we go back up to our trusty little sheet and ask, what do the rules tell us? Aha. So it says that you have to do certain things depending on whether you are dealing with current assets or current liabilities. So here's the rule. If there's an increase in a current asset, you have to subtract it from net income. If there's a decrease in a current asset, you have to add it. Increase in current liabilities, add. Decrease in current liabilities, deduct. Now you're going to say, oh, I would have to memorize 4 things. No, you don't. You can just remember, if you just remember that an increase in a current asset is subtracted and an increase in a current liability is added, then the other 2 are just the opposite of what you're doing, right? So I'm just going to follow the rules. I'm not going to talk about anything to do with why we're doing this, so that people don't run off the call screaming. Just follow the rules, and we're going to look at whether we have increases or decreases here, right? So going back to this thing, I've got an increase in accounts receivable. And an increase in accounts receivable, that's an increase in a current asset. So that is telling me that I have to subtract. Going back, just to remind myself, an increase in a current asset has to be deducted. Doesn't feel like it makes sense, because why is an increase a deduction? You know, you can come talk to me later if you want me to explain the long form answer, but for now, just trust me. Right, let me see if I can. I was trying to do parentheses. Just 1 second.
Professor,
Mm.
I have a question, not about the increase in accounts receivable, but the add losses or deduct gains. Why did we have 0?
Because we didn't have any gains or losses in this example. That's
Okay.
why. Mhm. Sorry, I'm still not comfortable with this, is what I wanted. Okay. Sorry, I'm being super pedantic here. Yeah, so add losses or deduct gains. We didn't have anything in the next example. There'll be something, and then I'll show you how to do that. So then there was a decrease in, decrease in inventory, right? We had a decrease in inventory for 14,000. Now we have to remember that the word decrease doesn't necessarily tell you what you do over here, right? Increase didn't mean I add over here. I have to follow the rules. So a decrease in a current asset, weirdly, I have to add that back. So inventory decreased by 14,000. So I have to add that number back per the rules, right? An increase in prepaid expenses. So prepaid expense is also current asset. So it's also an increase. So it's going to be the same approach here. I'm going to subtract, and that was 5,000. Okay, that I'm subtracting. Let me see if I can do the formatting. So there's an increase in the prepaid expense. Now we're coming to accrued expenses. We're coming to the current liabilities now. And remember the rules for current liabilities. If there's an increase, you add. And if there's a decrease, you subtract. So we had an increase in accrued expenses payable. This is a very long name, so I'll just give us some extra space here. Increase in accrued expenses payable, that was 10,000. And so the rules tell us that we add that increase, right? And you can also remember that you're going to do the opposite of what an increase in current assets is doing. You're going to do for an increase in liability. So this is subtracted, but this is added. And then you've got a decrease in accounts payable. And so that decrease is going to be subtracted. So we've worked through getting this thing right, you know, to Jahomi's point earlier, we worked through getting to this answer without actually really understanding why we're doing that, just by using the rules. So you can do it that way. Okay, and I'll explain in a little bit to those who, it's probably like the one or two people who actually care about why we do this, I'll explain briefly why the logic works. So what we do now is we add and subtract all these adjustments, all right, to get to a total number for the adjustment. So including depreciation expense, not just these last three things, all adjustments 1 through 3, we're going to, add and subtract them all together. You'll see if you do the math that it comes out to positive 15,000. It's important to watch your signs here, the pluses and the minuses, because, these numbers are going to go in multiple directions. So it's 15,000 net on all of these adjustments. And what ends up happening with this 15,000 is that we add it, right? Because it's a plus, we add it to the net income to get to 168. Sorry, 168. And this number, and this is the point of what we're trying to do, this number is net cash provided by operating activities. So even though our net income was 153,000, what we're actually saying here is that we generated actual cash of 168,000. So, here the cash flow statement is telling you the actual cash that we had on hand. So remember I told you that that the income statement is on the accrual basis. This is what your numbers would be on the cash basis. So I'll write here, you don't have to write this in the statement of cash flow, but I'll just write here, the 168,000 is the actual cash, right? Actual is the actual cash that the company, that it's like my letters are being eaten by mistake, that the company generated for the year. So if you had to go and look in their bank account or whatever for everything that came in and out, that's the cash that was generated for the year. I should be more specific, sorry, by operating or by the operations. That's not the cash generated for the year period. So questions on any part of this? Remember, this is only the cash flows from operating activities. I can tell you without a doubt, the other two parts of the cash flow are much easier to do. Okay, so if you even caught 50% of this, you're in good shape because we'll keep doing it. But please just take heart that the rest of the cash flow is actually much easier than operating activities, by far the hardest part of the cash flows. But I decided to start with it so that we can battle through the hardest stuff first, and then it gets easier. Questions or something that I need to repeat? Yeah.
It seems okay as long as you follow the formula.
Yeah, just follow the formula. It'll be fine. No,
you don't need to understand. You just need to.
No, it's true. It's true, because I can spend time now explaining to you guys, something like why is a decrease in accounts payable a subtraction, and it's going to go back to the number that we started with. This net income number doesn't capture the payment of accounts payable, because when you pay accounts payable, you're going to debit accounts payable and you're going to credit cash. And at no point does expenses or revenue gains or losses come up in this journal entry. So that means that there are certain changes in these accounts that the net income number doesn't capture. So we have to put those amounts in ourselves to get to a cash basis. And so, the easiest way is just to follow the formula. If you do, care about why we have to add and subtract, and maybe I'll take one more and explain this. When accounts receivable increases, it means that we said debit accounts receivable and we said credit revenue. So there's revenue in the net income number that wasn't actually received in cash. So we have to decrease the net income number for the amount of revenue that wasn't received in cash. Accounts payable again, There's payments for expenses that weren't actually, included in net income, so we have to subtract them and so on. So if you look at the book, you will see that they will try to explain to you for every adjustment why it is an addition or subtraction. But for our purposes right now, if you literally just had to go and follow these steps that are laid out for you one by one, you will still get the answer right. Okay, and I mean, sometimes that's really all that matters.
Mhm.
Mhm.
Thank you.
It's so anything else, guys, on this one before we do another one? Because the only way to get to, for this to stick is to just keep doing the examples. I can speak until I'm blue in the face and people will be asleep on the other side of the screen. So I'm happy to just keep doing examples. All right, so what I'll do is give you maybe a minute here, a minute or 2 minutes to copy down anything you need to copy, and maybe just let this settle a bit in our minds until 12:17. And at that point, we'll do example 3, which is also an operating activities example, but it does have a gain or a loss in it. And it's not yet a full, oh no, it is a full cash flow. So I can try and take you as far as possible through the rest of it. So take a minute here if you need to copy something down or make extra notes for yourself, or, pull your hair out or whatever you want to do because of how hard this is. I hear you. All right, so let's look at number 3 and see what's what. Okay, let me see if I can bring this down so it's not split between 2 pages. All right. So this is Rojas Corporation, and again, you see that there's this comparative balance sheet. Again, that's more likely than not in these questions that you'll get a comparative balance sheet. Sometimes they tell you the changes just in a paragraph, but a comparative balance sheet is a very popular way to give you the information. Rarely do you also get an income statement. It can happen, but often the information that you need from the income statement is just given as part of additional information. So Rojas comparative balance sheets are presented below. This is again for 2013-14. You can see that the cash has gone up. This would be the ending number for this 14,300 is the number that we have to end on at the end after we do all the activities, operating, investing, and financing, and we calculate the change in cash for the year, which you can actually calculate from here, right? You can see what the change in cash is for the year. It's 3,600, an increase. And, I'll show you how you end on the actual cash balance. And then you've got accounts receivable, which is a current asset. So you already know that that will be adjusted for in your operating activity section. There's also now land. That we weren't really dealing with these types of assets in the previous example. You can see that there's been a change to land here. It looks like some of the land was sold, right? Because it's gone from 26,000 to 20,000. Then there's buildings. It seems like the buildings you've not bought or sold any buildings because the balance stayed the same, but there's also accumulated depreciation here that's gone up by 5,000, all right? Remember, depreciation expense is part of the adjustment that we have to make in operating activities. So accumulated depreciation and depreciation expense are connected to each other. This 5,000 increase, because it's only this one asset, is most likely the depreciation expense for the year. Accounts payable, current liabilities. So you want to look at the change in this number for operating activities. Common stock, there seems to have been some type of issuance of stock. You'll have to see whether that is for cash or not for cash. And then retained earnings, there is a change in retained earnings, but we don't do any, there's no cash here that we have to calculate, but just remember that some dividends paid gets paid out of retained earnings, but we're still just concerned with cash. Okay, so you don't calculate the change in retained earnings and include that somewhere. Yeah, we've got some information. Okay, great. So that's our starting point, right? Remember, for operating activities, it's net income plus or minus those three adjustments that we were just doing. And then dividends declared and paid were 19,500. If you remember from the first example, we had dividends. They're part of financing activities and they are an outflow, right? Outflow from financing activities. So just to repeat, this net income number is going to go into operating activities, and your dividends declared and paid, right? Financing. And it's out. It's out of financing activities. All other changes in non-current account balances, had a direct effect on cash flows. So they're trying to tell you that there's no non-cash activities. So if a balance changed, like for instance, common stock over here, it wasn't because of non-cash activities. It was an actual cash receipt for issuing stocks. And then, of course, the change in accumulated depreciation is not going to be a cash payment. You're looking for depreciation expense to be added back as a non-cash expense. They're telling us that the land was sold for 4,900. And how much did the land cost? 6,000, right? So we can calculate that the land must have cost 6,000. Because you said 20,000 minus 26,000, right? We went from 26,000 to 20,000. There's no accumulated depreciation on land, right? Because we don't depreciate land. There's no accumulated depreciation on land, right? So we received cash of 4,900 for an asset that we believed was worth 6,000. So did we make a gain or a loss?
Plus.
It's a loss, right? Because you're seeing that on your books, you said this land is worth it, the carrying amount or book value of the land, right? Which is the same as cost for land is 6,000, but you sold it for only 4,900. So there is a loss of 1,100, okay? Because our carrying amount was more than the cash we received. Of course, now I have to transfer transfer all this stuff to, I keep writing here instead of writing on our little sheet that you guys all have access to. So exercise 3, let me just see if it's possible to transfer all this stuff here. Okay, so you have it there in case you want to refer back to it. So now we know already that there's a loss of 1,100. What do the rules tell us, right? We love the rules. The rules are going to say that we'll have to do something with that loss. And so, the rules tell you that you add back the depreciation expense. It tells you that you add back the loss to net income, and then you do all your other non-current asset and liability. I'm not non-current, sorry, current asset and liability changes. So let's start the situation off here with company name, the same. You'll see it's going to be kind of the same approach. Company name, statement of cash flows, blah, blah, blah. So it's Rojas, right? Corporation, statement of cash flows, and then it's going to be for the same, right? For the year ended December 31, 2014. I forgot to ask, I was taking the attendance and I just want to double check. I'm only calling names of people who I didn't see here. Is John here? John? No. How about Maya?
Yes, Professor, I'm here.
Oh, you're here? Okay, sorry, John.
Yeah, I joined late, but then I got disconnected, so I joined again.
Okay, okay. How about Maya Cheatham? No? Sorry for the interruption, but I don't want to forget to do this. How about Rebecca Perez? No, okay. Everybody else I have. Okay. So that's the name of the company, name of the statement, the date, and now you're going to do cash flows from operating activities. Activities. I don't know what's with me in this activities thing today. Okay, so again, just like I said before, you start with net income, right? So it's nice to remember that you just have the same starting point every time. And if we go back to the question, we get our net income number from the question. They told us that it was $22,630. Okay. Make sure that I'm doing this in the same line. Okay. 22,630. Right. Now you've got the same adjustments to reconcile, and so I'll just copy and paste because it's easier. You already know what this means. It's basically adjustments 1 through 3 to get us from net income to net cash provided by operating activities. All right. So adjustment number 1, again, you won't see it labeled as such on a regular statement of cash flows, but I'm doing it so that you can remember to go through those 3 adjustments yourself. You're looking for depreciation expense, right? That's what you're looking for. So when we go back to the question, they don't tell us like the loss, and this is sometimes what trips people up also with the statement of cash flows. The information isn't always presented in exactly the same way. But what you have to do every time, is kind of rote. It's the same stuff over and over. So you just need to know what you're looking for. And even if the information is not presented exactly the same in each example, you still will be able to, zero in on the thing that you need, the information that you need. So when we book depreciation expense, we debit depreciation expense and we credit accumulated depreciation. You can see that accumulated depreciation has gone up by 5,000 for the year, which means that the depreciation expense for the year must have been 5,000 because there was no sale of any of the buildings or anything like that. So we can safely say that our depreciation expense was $5,000. Does anybody need me to explain that again or write out the journal entry for depreciation so that you can make that connection? Okay, so you're accepting that depreciation expense is 5,000 because accumulated depreciation has gone up by 5,000 for the year, and there wasn't any sale of any assets, so there isn't anything else impacting it. Going back, yeah, go ahead.
What does it mean? Can you explain what activity happened when the depreciation expense happened? Like what happened with the 5,000?
Yeah, I mean, if you're basically saying that the buildings were depreciated by 5,000 for the year, okay? So the journal entry that the company,
5,000.
sorry?
We did. Okay, so the buildings were worth 5,000 less.
That's not worth, you have to be careful with that. Depreciation isn't about a value, drop in the value. What it is you're just allocating the cost of the building over the time that you use it. All right, so it's an allocation of the asset over time, not a drop in value necessarily. In fact, buildings, the value usually increases over time. But depreciation is saying that we have a building, right, of $70,000 that we own. When we buy that building, we have 2 options. We can either expense the amount immediately because we just made a payment, or we can say that it's an asset and we're getting future benefits from it. So we decide to put it as an asset, but every year we are using the asset to help us to generate revenue. We are required to depreciate some portion of the asset to show that that asset is being used. And that's the 5,000.
Okay.
All right. So that's straight definitional stuff for depreciation. So this would have been the journal entry that the company made. And, the accumulated depreciation, I'm now teaching you stuff from accounting one, that's so weird. That's going to come up again, possibly here with this cash flow. So if you look at the accumulated depreciation account, right? So it's a contra asset, so the balance is, you know, on the credit side. And if you look at what was going on with it, it had a beginning balance of 10,000. So there was, you know, 10,000. I'll just write BAL next to it over here. I'm not being very, you know, good with the structure of the thing. To that, you add 5,000 for the, you know, for the current year. And so we end up with this 15,000 that is being shown on the balance sheet, right? So we can infer basically that depreciation must have been 5,000 for the year. Hopefully that helps everybody to see where the 5,000 is coming from. Other questions on this? Happy to answer. Stuff isn't going away. So, you know, we might as well make peace with it. All right, so we you know, think about it. If you have questions, just stop me, I don't mind. So we have the depreciation expense that we adjustment number 1. Adjustment number 2, remember, is the gains and losses business. So, you know, sorry that I have to keep going back and forth, but all the, you know, all the theory is up here. So deduct any gains or add any losses. We have a loss, so we have to add the loss back, because the loss already decreased net income. When we add the loss back, we zero out the impact of the loss, because anything to do with the sale of the land is going to be dealt with in investing activities. So we don't want the impact of that sale to even feature in operating activities. So we will add the loss on sale of land, and that 1,100, I shouldn't have skipped the line here, but it's okay. Let me see. That 1,100 is going to be added back. Okay, it's weird because you're like, why are you adding a loss? You have to remember that the 22,630 already includes a subtraction of that loss. And by adding the loss back, you're making it 0. And so you can do everything to do with the land sale in investing activities. Or just follow the rules, right? Don't think about it, just follow it and you'll still get it right. My brain doesn't work that way, but you know, I get it. It's hard to figure out how to do some of the stuff. So as long as you know the rules, you're fine. Adjustment number 3 is all those changes in accounts receivable, accounts payable, and so on, right? So we need to go back and see, right, it's the changes in all the current assets and current liabilities that are not cash. So you're not going to do the change in cash, only start at accounts receivable and so on. So let's see what we have here. We do have accounts receivable and we have accounts payable, and that's it. So we really only have 2 things that we need to look at. For accounts receivable, there was a decrease in accounts receivable and the decrease of 2,200, right? So there's a minus 2,200. And for accounts payable, there's also a decrease, and it's a decrease of, hopefully my math is right here, it's a decrease of $18,730. So you've calculated that they're both decreasing, right? And so again, you can just follow the rules and ask yourself, what do I do with a decrease in a current asset? This being accounts receivable, a decrease in a current asset, I have to add it back, all right? So here you go, decrease in accounts receivable. That's going to be an addition of 2,200. And then you also have a decrease in accounts payable. And you can guess already because they're going to go in opposite directions. It's minus 18,730. And this, again, this amount represents a payment that the company made, right? Oh, I was on the wrong thing. It represents a payment that the company made that hasn't been accounted for in the net income number. So we have to subtract it. So that's our adjustments 1 through 3, right? Add back your non-cash expense, depreciation expense. You had to calculate that. So that was different from the previous example. Add the loss. You also had to calculate the loss, and remember that you're adding the loss and then the 2 current asset and current liability amounts. Questions on the adjustments? We'll let it sink in for a minute here. Okay, so let's look to see what the answer is here. It's going to be negative 10,430. That's what this all adds up to. Obviously, you can do a sum or whatever in Excel, but I'm just trying not to create any further work for myself. So 10,430 minus. So these two numbers are going to net out, right? It's not an addition like the other one, it's a subtraction. So they net out to 12,200. So this is going to be labeled as net cash provided by operating activities. So what does this tell us? It says in our income statement, it shows that our profit was 22,630, but the cash that we actually generated from our operations for the year was only 12,200. And a big part of the reason why the cash was so low is that we paid back a whole lot of our accounts payable during the year. So we ended up with less cash. That's what, this is the story that is being told between these two numbers. So if someone was just looking at net income, they'd say, oh, you're having a good year or whatever, but they don't realize that you have 10,000 less in actual cash. So if you have bills and stuff, more bills and stuff to pay, you have less cash than what someone might think, like a bank or someone who's giving you a loan. They will always ask for cash flows as well. Questions there? Right. Okay, so that's operating activities. Now we can actually move on and do the other activities. We'll do the whole cash flow for this example. So the next one is cash flows from investing activities. And remember, investing activities is all the purchases of property, plant, and sales of property, plant, and equipment, investments in securities and debt of other companies and loans that you issue to people or collect from people. So the only thing that we have in this example, we can go back again and check, right? If we look at the balance sheet, the only thing that we have that is an investing activity is the sale of the land. Right, that's what we care about. The buildings, nothing changed in this balance, so there's nothing to do with investing activities there. So how much cash did we receive for the sale of the land? Anybody? The land was sold for
4,900.
4,900. Perfect. So that's what we're going to use. So that's what's, when you think about that loss that we didn't want to keep in the operating activities, we're actually going to account for, the impact of that loss in investing activities, because instead of saying sale of land 6,000, because that's, how much the land costs, we're only going to include 4,900, right? That's the actual cash that we received, and it's an inflow because when you sold the land, I'll show you the journal entries here just in case people are confused as to why it's an inflow. You would have debited cash for 4,900. You would have debited the loss for 1,100, and you would have credited land for 6,000. So the actual cash is what you care about, and the actual cash is 4,900. So that's why you also only put the 4,900 and not the 6,000 cost of the land. And so that's it for investing activities. Nothing else happened. The buildings weren't bought or sold, and there's no other, property, plant, and equipment. So then this subheading is called net cash provided. When it's a positive number, it's called provided by, okay? Investing activities. If it's a negative number, it's used by. And so this is going to be the same. And I know it's weird to do a subtotal like this, but I'm showing you how you would normally do it. And, I know there's only one number, but we have to show what the item is about, and then we show the subtotal. Questions on the investing activities part of the cash flow? And what did I say? That operating activities was going to be the hardest, right? Investing activities, you're basically just copying one number over. So, any questions? All right, so I'll push a little bit and see how far we can get. Cash flows from financing. So there's the third piece of the puzzle, right? Financing activities. So remember, financing activities, anything to do with issuing stocks or buying them back, issuing debt or repaying the debt, and then the paying of the dividends, right? So, and again, that's in your little cheat sheet that we were looking at in the textbook and also on our notes. So if we look over here, what do we have for financing activities? We do have this common stock balance that went up, right? It went up by $6,000. So there was an issuance of common stock because it told us here that there are no non-cash activities, right, for this company. So that must have been a, debit, cash, credit, common stock. So that's a cash inflow under financing activities, right? So I'm going to write here issuance of common stock. And on the side, again, just in case anybody wants to know where that came from, this would have been the journal entry. Cash, 6,000, because it's a difference between 69,000 and 75,000, and common stock, 6,000 as well. And remember, there's no paid in capital in excess of par value. There's nothing like that given in the balance sheet. So you just take the straight 6,000. So that's a cash inflow. We received the money because there was a debit to cash, right? Remember, we're always concerned with what's happening to cash. And then we have the dividends that were paid of 19,500. That's also part of financing activities, and previously we said it was cash out. So payment, when it comes to these names over here, oh, sorry, I forgot to put the 6,000, my bad. When it comes to the names over here, like the words, you don't have to, you don't have to be so worried about the exact wording, as long as you're just giving, an idea of what's happening. I think in Wiley, it will probably, tell you something, like some drop down, so you should be fine. What did I do wrong here? Is the payment of dividend cash in or cash out?
Cash out.
Cash out, right? So I need a minus. And so I'll just copy the formatting over here. All right, so this in the end is my cash flow from financing activities. It's negative. It's negative, so I call it net cash used by financing activities. Right, notice the change in language. So this is the type of nonsense that happens on Wiley, where the thing keeps saying you did something wrong and you're like, I did nothing wrong. And then you realize that one word is different. So that's why I'm highlighting it. This was all provided by, this is used by, right? And so that's the 13,500. Questions there?
Professor, where did you get the 19,500?
In the question. Yeah, it says dividends declared and paid of 19,500. Okay.
Oh, okay.
Other questions? So we're like on the home straight. I'll be able to finish this in the next 2 minutes, believe it or not, right? Although it felt like the greatest torture known to mankind, but we're almost done. So the next line is that it's either net increase or decrease. It depends on, whether it ends up being positive or negative, right? So it's a net increase or decrease in cash during the year. And the way we do that is, let's say this is A, I'm just going to call this A, B, and C, right? These totals. So it's just the sum of A, B, and C. That's all you're doing. So you're saying 12,200 plus the 4,900 plus negative, right? 13,500. So the increase in cash for the year is 3,600. Is that true? Well, if we go and look at cash over here, we will see that there was in fact a change in cash for the year of 3,600. If you say 14 minus the 10, 7, it's 3,600 and it's an increase. So you can check your work, right? And I'll put it over here. It's the 14,300 minus the 10,700 of the previous year. That should be the same answer as what you have over there. And it is. So we know that we're correct. And then we say, what was the cash at the beginning of the year? You're getting this from the balance sheet. So right over here from balance sheet, right? I don't have to come up with a number. I know already what the number was because I just looked at it. It was 10,700. And so the cash at the end of the year is going to balance out as 14,300, which is the same number as the balance sheet. Should be equal to cash on the balance sheet. And that's the magic, right? Abracadabra, right? That's the magic, that you end on the same number as the cash. So by the time you start the question, you already know what the answer should be. And so you can check your work that way, because when you go back to the balance sheet, you say, 14,300. So I'm correct. All right. Fun times, right? Fun times. I'm 1 minute over. I owe you a minute next time. But that's how we do a statement of cash flows, and next time we will just keep plugging away at it. I'll probably do the homework for chapter 15. I'll go over on Thursday first, and then we'll just continue with cash flow examples until everyone's feeling kind of comfortable. All right, go and have a lovely day. We've got fantastic weather today, so hopefully you can get outside for a few minutes. If you still have questions for me, stick around, but otherwise go and finish the chapter 15 homework. If you haven't done it yet, it's due at 6 o'clock, or hopefully you can go and give yourself a brain break after the madness that just happened.
Professor.